So what you're going to see here is the first of two trades this morning. This was a SPY BB reversal setup. Thought I had a nice reversal after a failed breakdown. Had the right thesis on this trade, but bad execution timing, which ultimately cost me. This ended up running quite a bit. SPY hitting 421 later in the afternoon. So a little bit unfortunate. Got stopped out, and then this thing ran big. So painful trade, bad execution, cost me money. Yeah, we're hanging out at 17 spot 3. So we're not seeing too much selling enthusiasm here, and the volume's telling us that exact same narrative. This looks good. All right, guys, I am in. Average price 417.21. Average price 417.21. So this candle closed inside my appropriate risk reward zones. Was basically a buy at candle close entry. Maybe I should have waited for the overreaction flush, but had the good risk reward towards high of day. Call it like 416.90. All right, let's see if this can give me a little bit of follow through here immediately. Okay, so far so good here, right? So far so good. I want some separation, right? 10 cents separation is not great. But if I can get like 35 cents of separation, right? About a 1 hour move, that'll be my first profit target. About, 417.50-ish, right? Give or take. So what I didn't like about this trade after my entry price was we kind of kept making, 5 cents higher, 5 cents lower, and just couldn't really get that separation up and over. So maybe the indication from sort of my entry timing was that I was a little bit early on this kind of entry where it wasn't green right away, right? It wasn't finding that sort of support right away. Generally, I like to enter in on an overreaction flush, which then kind of gives me that exhaustion. When I'm buying, the candle close, I'm not really getting that overreaction flush. So maybe that's the technique I need to change going forward, because watching this back, I'm still seeing a bit of that struggle. I'm not seeing kind of one side giving up here. And so that's what I like to see before I enter. And maybe with that technique, I don't get that opportunity. So it might mean I miss more trades. But I got to test that out for a little bit. That's something to think about over the next little bit. Don't like that reaction. So bulls are defending low of day here pretty well, but they're defending an area where bears are still kind of fighting a little bit. So when I can buy that overreaction flush, I can buy basically those exhausted bears. That makes it much easier for me to have basically gotten that bottom tick. So I think going forward, I don't think I'll be buying too many candle closes. I'll be waiting for that flush like I normally do. Those dips keep getting bought, but they're not giving me separation from when they buy, right? Which is the annoying part here. And the reason I'm not getting that separation in this context, right, is because I haven't gotten that basically exhaustion from bears. So they're still fighting. Like, it's kind of a teeter-totter here where the bounce back is bigger from bulls, but bears are still able to kind of push things down a little bit and fight back. So I don't know how much reason I have to be aggressive. Stop loss is 416.90, right? Okay, almost back to entry price, 6 cents away. 3 cents. Come on, there we go. So we get some separation here now. On the fake out, we should have some trapped sellers, right? So hopefully that can now lead to a little bit of follow through here higher. I just don't like the lack of separation here, right? Every time it kind of gets up to that, say, like 417.30 area, we can't seem to get really through that with any enthusiasm. That maybe makes me think I was a little bit early. Honestly, on my entry, whatever, entry's fine, good enough. But the thesis maybe a little bit early. So I think that's a little bit of confirmation bias on my end. Like, my thesis was correct, but my entry was actually incorrect watching this back. So I should have waited for a bigger pullback. I should have waited for a better sign of that exhaustion before I was confident I was actually going to get that easy follow through. At this point, I can definitely get that follow through here, but I don't think that was my A+ entry really on any trade I'm ever taking. So that's probably like a B-, C+ type entry. And okay, I can probably get bailed out there often enough, but it's not perfect, and it gives me a lot of flexibility to basically get really frustrated with sort of how I traded. And that's definitely how I felt on this trade, where, you know, there's nothing worse than having the right idea but the wrong timing, and that then can kind of spiral you into making a bad decision later on. And so a little bit frustrating with how I looked at that a little bit, and maybe how I talked myself into this instead of cutting it at kind of a scratch or break-even play when I knew that I was a little bit early, but I looked at it the wrong way. All right, guys, I've been stopped out here. Annoying. So the annoying thing on this trade as well is I had an operational issue that kind of bailed me out, but fairly luckily. I only filled about 1/5 of my position, only set my stop loss for about 1/5 of my position. So I ended up closing the rest the second I noticed, but ultimately that could have ended up being a lot worse, so I need to be less sloppy on those sort of things. Yeah, I think I was a little bit early on my thesis. A little bit early on it. So thesis on this second trade here on Tesla was a 200 bounce. We saw a good kind of reversal candle off of that 200 area, and then a low vol pullback from bears. Basically thought I had a really good risk reward ratio and support off of the MA to kind of continue higher. Ended up getting flushed and stopped out. And that's definitely interesting on Tesla. A lot of red lines here, but what do you be going for, right? Kind of a low vol pullback after a high vol breakout. You're consolidating at the MA. Do you want to see a high conviction breakout or bounce off the 200 area on volume? We bounced off the 200 area on volume, right? A little bit of separation. Now you're getting that low vol pullback into the moving average. I would say this looks interesting as well, right? And you're not chasing this as a breakout trade. It's not extended like that meta is. So I would say this definitely looks interesting. Your risk reward here is great too. So what I would say in this context here is that my stop loss watching this back looks like it's in the wrong spot. My stop loss should have been low of day, which then would have made that overreaction flush that you'll see in a second pull back into my ideal entry zone. So I think I got a little bit too aggressive with my stop loss location, and that's what cost me money here. So let's see how this candle closes. I think this is a viable spot. Then again, right, if my thesis is a 200 defense, I want to basically get out once that 200 defense gets invalidated, which is low of day here. And your stop loss would be like 201.30. Not bad. Decreasing volume, right? So we know it's not strong bears. All right, guys. So I am in average price 202.20, 202.20. All right. So bad stop loss location leads to the like basically execution error here, right? If I have one mistake in essentially that trade, that then can compound into me making other mistakes inside that trade. Bad stop loss location leads to bad entry timing, where I'm basically buying at that candle close, which I've already discussed I don't want to be doing. So kind of a little bit sloppy and mistakes compounded here. And see if we can get some pretty quick separation would be nice, right? There we go. See if we can get a bit more here. And just like the SPY, this thing ended up running huge after my entry. So, once I got stopped out, okay, it then ended up pulling back and running all the way to like 206 by the time of this recording. So, like I said, right, when you start to make one mistake, it can then compound into other ones. So what I'm trying to focus on, or what I'm trying to identify here, is what that first mistake was, which could then explain why I rushed into an entry or why I picked sort of the wrong spot for an entry. And so if I pick that sort of incorrect stop loss location, it's easy to understand where sort of other pain points come in. The selling volume that I'm seeing across the board really isn't that concerning, but because my stop loss location was so wrong, I just never gave myself a chance with that overreaction flush. So disappointing here. I think maybe even a little bit on tilt from that first trade where like I had that operational mistake. So I had a little bit of stuff kind of rattling in my head. Maybe this is one I should have avoided altogether, where then that early mistake leads to the stop loss location mistake, which then leads to the execution mistake, which then leads to the second stop loss, which leads to more tilt, right? So you see how it all kind of stacks up here together, and at this point I'm already stopped out and in pain. So not a great banner day, a little bit frustrating with how I traded, all things considered, and certainly wish I had a little bit of a better performance, and a lot to think about, a lot to learn from these trades. But ultimately, I'm not going to complain too much. Been a pretty strong month, albeit this has been a kind of crappy day here today.